Listen up, traders. If you've ever chased a losing trade like it's personal, thinking you'll get even with the market, you're not a warrior. You're a fool on a suicide mission. Conventional wisdom says grit and persistence win in trading, but revenge trading, that's the quickest way to turn your portfolio into ashes. Today, we're dismantling this toxic grudge-holding bullshit that guarantees your failure. Most traders fall into this trap because it masquerades as toughness. You've just taken a hit. Maybe oil futures tanked on you, or Bitcoin laughed in your face. Your blood boils and that voice in your head screams, double down. Show the market who's boss. It feels right at first because society glorifies revenge stories. Think Rocky punching back, or the underdog flipping the script. In trading circles, you'll hear war stories from guys who fought back and won big once, conveniently forgetting the 10 times they got wrecked. It's addictive. That adrenaline rush mimics confidence, making you feel alive and in control. But here's the kicker. The market isn't your ex or a bully. It's a faceless machine that doesn't give a damn about your feelings. Chasing revenge lures in 90% of retail traders, inflating egos while deflating accounts, because it preys on our primal urge to fight back instead of folding smartly. Strip away the bravado and revenge trading's pure emotional sabotage. Ego dressed up as intuition in a high-stakes casino where the house always wins on impulse. It's not strategy. It's fear in disguise. Born from the terror of admitting you're wrong, your brain hijacks logic. A loss threatens your self-image as a smart trader, so you lash out, over-leveraging or ignoring stops, pretending it's calculated. In futures trading, where margins amplify every mistake, this grudge turns minor setbacks into account killers. Markets move on data, trends, and probabilities, not vendettas. Holding a grudge clouds judgment, leading to confirmation bias where you only see setups that validate your rage. It's ego's ultimate con, convincing you that emotional fire trumps cold analysis, when in reality, it's the spark that ignites your downfall. Pros know this. Amateurs learn it the hard way. Wiping out because they treated trading like a personal feud instead of a probability game. Enough theory. Let's fix this crap with real, objective moves. First, implement ironclad risk rules before every trade. Cap losses at 1 to 2% of your capital per position. No exceptions. This isn't optional. It's your firewall against grudge-fueled stupidity. Write it down. Automate stops if you can. Remove the temptation to fight back by making exits mechanical. Second, enforce a mandatory cooldown after a loss. Step away for at least 24 hours or until you've journaled the trade objectively. What went wrong? Was it the setup or your emotions? No revenge entries until you've dissected it like an autopsy, turning rage into data. This reframes losses as lessons, not insults. Third, shift to process over outcome thinking. Build a checklist for entries. Does it meet your edge criteria? Back-tested win rate above 60%. If not, walk away. Track your adherence weekly. Aim for 90% compliance. This replaces ego with evidence, turning you from a vengeful gambler into a disciplined operator who treats the market like a math problem, not a nemesis. Bottom line, trading with a grudge isn't bravery, it's bankruptcy bait. True confidence doesn't come from avenging losses or flexing ego. It stems from unbreakable discipline, where you trust your process over your pride. Ditch the revenge fantasies, embrace the math, and watch your edge compound. If you're still holding grudges, unsubscribe now, because winners don't whine, they win. Hit like if this slapped some sense into you. Subscribe for more no bullshit trading truths, and drop your worst revenge story below. Trade smart, or don't trade at all. Get back to the process. Get back to work.